Welcome everyone. Welcome to Rethinking Balance Sheets every Friday morning at 10 a.m. Malaysia, Singapore, Beijing time. We're here to rock your thinking and to titillate your senses, I guess, in terms of understanding the balance sheet and really trying to see if there's some insights you can derive from some of our guests that we bring along. Ravi is here with us. Ravi, great to have you with us again. Let's talk about what we're going to talk about today. What's in the air for today?
Hey, morning, everybody. And yeah, wherever you are, good evening. I think some of the listeners are from the US as well. So whatever it is, but I suppose going back to that famous start with the Australian way, good day probably works to everybody. Yeah, Roshan, we've got Mr. Ashok here this morning from BlackOak, Singapore.
And we're going to jump into distress resolution involving large complex business across Southeast Asia. Wow, it's a mouthful.
It's a mouthful, but some of those balance sheets do go wrong, more so with this pandemic. The go-to firm I think in Singapore now, for if you're in difficulty, is BlackOak. They specialize in this. We've been working with them for more than a year. And what I like about them is a lot of lawyers are just on the law. This is a firm which I see. It's almost like when you used to watch LA Law and those lawyers, you knew the commercial stuff. So you're really the hotshot lawyers. So let's get Ashok on, I suppose, as soon as possible. Yeah.
So let's get Ashok Kumar, who's joining us. Ashok, welcome to the show.
Hi.
Super happy, director of BlackOak LLC in Singapore at this point in time. Happy to have you with us in the show. Maybe you can very quickly tell us a bit about yourself and a quick sort of a background on who you are.
Sure. Okay. So first of all, very kind words. Thank you very much, guys. Maybe a bit more statement, but I'll just take it.
Okay. Take what you can, man.
Okay. Now, we are a purely special situations firm. We only do this, but throughout the whole gamut of what is required for restructuring. So we do the M&A, the banking finance, the bond restructuring and dispute that comes out of this, but we don't do originations. We just very focused on what we do. And I'm ex big for Singapore. The main reason and the driver for setting up this firm that Darius and I did was to create a firm that was completely unshackled from conflict. That was our main driver. So we are maybe controversial because we do things sometimes on the side of the capital stack that maybe next don't like, but because we just do what we have to do, for the clients and shake things up. That's
maybe you can share a little bit. I mean, not maybe some of our audience may not be so well versed in terms of the whole restructuring process and options that entail for companies, right? That are no longer able to service their debts. I mean, essentially, that's why you get into a restructuring process, right? What sort of maybe you can walk us through that whole process and potentially some of the options that you would sort of provide for these companies, just to give a bit of a background to the audience.
Sure, not a problem. First of all, let me just sort of give you an idea where we operate geographically. Okay, so even though we are a Singapore firm, we operate mainly in Indonesia. We're doing stuff in Malaysia, like what Ravi was talking about, and we have a few other things in Malaysia as well. And then Hong Kong is quite important for us. We typically act in the capital stack. We either act for the borrowers or for the new money or for the mainly bond debt. Okay, we typically don't do bank. Okay, but that doesn't mean we don't do it, right? So Indonesia, Malaysia, Hong Kong, our clients are in Hong Kong. We do restructuring. We do partner with on deals in Hong Kong. A lot of our fund clients actually sit in Hong Kong. Then India is the other geography. Of course, because it's cross-border, and if there's bond debt in particular, the most of the indentures are US or English law governed indentures. Finance documents are typically English law, US law, or US law governed. So the underpin for the restructuring may be Singapore, but it's very cross-border. The work we do is very cross-border and international because we have to bring stitch all the various portions together and the peculiar laws that sit in our region. I mean, don't forget, Malaysia is a common law jurisdiction, like Indonesia is a civil law jurisdiction. So the approach is very different. Understanding the environment is the most important, and then understanding how the laws work and sometimes don't work in jurisdictions like that is really the skill.
Maybe just to give some context before we go into the deep dive, can you just tell us, and you guys are very commercial, can you just give us a little bit of the lay of the land? We've had this pandemic March early last year, and then we are at various stages of economies opening. So what's the lay of the land? Are you seeing restructuring coming on as banks end their moratoriums, and or people just can't hold out? Give us a lay of land, and then where's the play with the guys who are investing?
Sure.
What are they saying in the market space?
Okay, so look, I mean, prior to the COVID pandemic, I mean, balance sheets were already quite leveraged. Okay, and so there was a lot of debt, but the debt was pushed out because of last year's measures. And then you layer onto that a hell of a lot of liquidity sloshing around all over the shop, right? Finding a place to go to. But so you have a funny situation where values were high, okay, down cycle, something wrong there, right? Okay, disconnect.
Mm-hmm.
I mean, everybody knows that. So the last year in Singapore was fundamentally trading companies that took the brunt of the downturn. That's because these businesses rely on volume. Okay, and when the volumes come off, the fragile financing that they have sort of starts to implode. All right. So last year we saw a lot of activity there in Singapore, and also in the offshore oil and gas space, where really those markets were badly affected. Retail was interesting. So retail last year, of course, took a hammering, but there was a lot of government support across the world for retail, especially physical retail, right? And I'm talking about physical retail, okay? Now, so I think really in the next year or so, we're going to see where the landing is. There are structural changes in some sectors, like physical retail, for example. The whole lifestyle shift's going to change, and then what's going to happen there is another question. And that would have an impact on REITs, especially property REITs, and then the property market as a whole, commercial property. Then on top of that, commercial office space also hard to see. I mean, if people don't go back to office, they get used to the way they are working. The need for physical retail, our physical commercial space is going to be interesting to watch. All this will evolve over the next year, I think. Of course, in the travel industry, that's the other thing, hospitality and hospitality and airlines, right? Okay, I think we are in this hiatus. Some areas have taken the hammering already. But the interesting thing is this, what I'm noticing is that the new money is coming back in, okay? So values seem to be maybe finding some reality, because last year it was disconnected with reality. And I think the new money is now hunting for places to go to. And that's not particularly sectoral focus. It's really where the opportunities are. So I think for restructuring, for the restructuring scene, whether you are a new money provider or whether you're a professional, next year you will see a lot of activity for us.
No, so you're looking at 2022 to start seeing the big shifts to happen.
Yeah, correct. You'll see some collapses, and then you will see the new money finding its place into supporting viable businesses. I mean, I've always said this: the COVID crisis is like this. At the end of the day, what will happen is that the businesses will fall into three buckets. Okay, when the pieces fall on the floor, right, it will fall into three buckets. Those companies where the balance sheet is just completely hammered, unsavable, and unviable business. These guys just got to go, right? When I say unviable, meaning not viable in the new economy, okay, it's coming.
Yeah.
The second one is where the business is salvage is it has to be salvaged because it is relevant in the new economy. So I think money you'll find is way there. Okay, and there's a whole lot of gray in between. There are balance sheets that are salvageable, but the businesses are not really relevant in the new economy. So their operational turnaround has to couple financial restructuring. So so there are a lot of companies in that in the last bucket, I think.
Yeah. Yeah. And in that sense, I think this is great to lead on to the next question. I'm just going to explain a little bit about what a debtor in possession is, just for everybody listening out there. That means instead of getting a third party like a judicial manager to come in and solve the problem, we actually work with the promoters of the business to turn around the company. Do you see this as the primary way a lot of stuff's going to get resolved, or what's your take on debtor in possession restructuring?
I am a big fan of debtor in possession restructuring. I was part of the law reform that took place in Singapore and still continuing to tweak and suggest things. Okay, I mean, and I must say that here the government is very, very particularly interested in creating Singapore as a regional restructuring hub. What that means to me is this. They're hoping to create perhaps Singapore as a center for for raising of capital for regional restructuring. That's one thing. Okay, but these things don't work in vacuum. They have to work together with the laws of the other countries. So the cross-border recognition issues, the harmonization, utilization of restructuring laws is actually crunching along. All right. So you got to work with it. Even if you can't, you got to just work with it. Okay. Now, debtor in possession to me, okay, I think is the way to go. I mean, if you look at US Chapter 11, which started in the 70s, the US economy at that time was pretty much asset-based lending as it is now in most of Asia. Okay, so there was an evolution of first the jurisprudence over decades. Okay, but the rescue culture together with protection for new money into a restructuring with the rescue finance provisions in the debt financing provisions in the US. To me, it was a clear example that they were miles ahead of everyone else in terms of restructuring. Another model, which is what you've taken, all right, which is what we use and still have, but really doesn't work, is creditor-driven processing, restructuring through a judicial management or administration or something like that. Okay, because what happens is I feel that when the company, I mean, short of fraud, okay, guys, I mean,
short of fraud, short of fraud.
Okay, short of fraud, fraud, unless you completely change management and start again, then debtor in possession maybe works. But if it is business, maybe a little bit of, I wouldn't say incompetence, but maybe misjudgments. The business takes a beating. Really, the business networks are all with the company, right? And in this part of the world, most of our businesses, our big businesses, are pretty much owner managed. You take the shareholder out of the play, the future survivability of the business is actually doubtful. So unless you can find a strategic investor that will come in, okay, and take over, but then then value is another question. Strategic investor, the big fight over value, so recoveries really may not be there, okay. And I tell you, the surprising thing, I see that culture in Indonesia. Okay, in Indonesia, despite all the uncertainties, okay, and maybe even because of the uncertainties, people sit down and talk. All right, they sit down and talk. The PKPU process may have its difficulties, its unreliabilities, and its lack of transparency and opaqueness, but it's got certainty in the period by which this restructuring needs to happen, 270 days. End of it, the company goes into automatic bankruptcy like it does in India for a longer period. And that forces people to sit. And you overlay with that, the funny thing is, if you overlay with that a system, a legal system that maybe it's unpredictable, okay, people fall back on actually commercial deals and consensus. That has been my experience in Indonesia. I've had better success in Indonesia on the big restructurings than I've had in other parts of Southeast Asia. Okay.
So then,
Funny thing is,
that's interesting. That's very
that's
interesting.
really interesting. I
Yeah.
must say. But just to pick up on that question, because you hit it on the nail. Because one of the big controversies, in fact, when I'm talking even to those guys who are running judicial managers and the laws in Malaysia, and the large restructuring is obviously guided by CDRC here, and they are trying to shorten the time frames. But you see, when you have a fixed time frame of 6 months or 270 days or 12 months, whichever way you look at JMs, 12 months in Malaysia, our CDRC is saying 6 months for approval in principle. And you talk about your 270 days. So we got three different timelines there. And I think judicial management I've seen in Chapter 11 US is about 18 months. You're trying to compress it, yeah. But my issue with that is you've got large, complex groups. I mean, if you put a 270-day, is that realistically done, or does it really make it happen on the other side of it, in terms of getting that compressed period? That how does it drive thinking and action orientation to getting things done?
Yeah. I mean, that's a very good question, Ravi. Okay, there's always the justification for extensions and prolongation of insolvency proceedings that only enrich the advisors. But
not us. We are so we don't get anything.
Present company excluded. Okay.
Oh, thank you.
The reality is this. Okay. It's all about value destruction when you have a process in place. Okay. And I find that is why I find a data-driven process like administration or judicial management extremely value destructive. Okay. And the prolongation of that gives no comfort to the people dealing with the business at an operational level. The speed to get out of it, the speed to get out of the process is critical for confidence with the trading partners.
Correct.
And burn on restructuring costs.
Yeah.
And just getting people to sit down and talk. I mean, this is the thing. The human nature is that you got more time to think about things. You'll just take the time.
Yeah.
So there has to be a finite period. There's a lot to be said. I mean, India's restructuring laws are creditor driven, but it is finite.
Right.
Yeah. And it's working. I tell you, it's working in India.
Interesting. Very
We've done
interesting.
some deals with India. Yeah.
And in terms of, you talked about creditor-driven restructuring, but what's the preference you see in terms of judicial management and stuff like that in Singapore or across Asia? Where do the banks sit on all this?
Okay, so now you hit a very, very, very pet topic here. Okay, and maybe the bankers in the audience may not like what I say, but the reality, Singapore at least, is this.
Don't worry, they don't like us as well, so it's okay. No, they love us. It's really funny. We've been told we got to listen to them a lot more. Okay, fair enough. We're going to do that.
Okay, so as a tool for restructuring, I'm not a fan of JM because it is value destructive. Okay, and you have essentially displaced management who don't really, who are needed to keep the business going. Okay, they tend to prolong, they tend to cost a lot, and most of the JMs end up in either managed liquidation or a straight liquidation. That's the case. Yeah. So last year saw quite a number of these spectacular collapses in businesses that were fundamentally in trading. Okay, so mainly commodity trading, oil, and other trading. So a lot of fraud. Okay, so the banks, obviously, the banks need to answer internally, especially when there's fraud. So the preference is always to go for JM, displaced management. Okay.
Yeah.
But for whatever reason, maybe because they cannot, it's just harder for them to explain internally, all right, or whatever. They just push these companies into JM that eventually just kill it. Okay. So that has been the experience. Almost every JM last year has not led to a successful, proper structuring of the balance sheet. Okay. It has led to either a kick down or in eventual managed liquidation or liquidation. It's unfortunate, but it's gone that way. Yeah, I mean,
no. I think it's good that we hear, because I always think Singapore's a little bit ahead of the curve in the judicial management process. I mean, to be fair, in Malaysia, we had, during the Asian crisis, we had something called special administrators long before anybody else. We did that, and it did work to a great extent because of extensive powers, and it really, in reality, the people in charge of it was the actual Dana Harta management, just managing the essays to get things done quickly. And it was very successful. But coming back to the one thing that we're talking about, non-legal stuff, maybe just shift a little bit. You talked a little bit about Indonesia and that process. Now, if I were to ask you, do you see an issue with mindsets? People still grappling with anger, denial, etc. Do you still see that as a problem, or people have just 18 months into the crisis are now saying, okay, let's get going, let's get something done?
Well, it depends on where you're sitting, right, in the creditor stack. Because if you are financial creditors and you're,
I'm saying from the promoter's perspective.
From the promoter's perspective.
Sorry. Yeah.
Okay, from the promoter's perspective, clearly, leaving aside fraud, okay.
Yeah.
Primary objective is to get some shareholder value, right? You want to stay in transit to some extent in the post-restructuring company, okay?
Yeah.
There's always a lot of anger. I mean, obviously, if there's fraud, it's just extreme anger, okay? And that's where irrationality comes in. I mean, to me, even if there's fraud, right, you just have the oversight. Ultimately, it's about who can preserve the company.
Yeah.
Okay? To pay creditors, restructuring. Objective again, and when it's fraud, emotion. But against promoters, okay. But where I feel there's mature.
Okay, Ravi, can you hear? Sorry,
I can't hear. So
yeah, I think you're coming in and out.
Okay. You need to go in and come out again.
Yeah, Ashok. We are having some. I think Ashok had some technical issues. But Ravi, I mean, just listening into Ashok as he sorts it out. What are your sort of thoughts? I know we have a question from Daniel. I think in the moment Ashok gets back, we'll address your question, Daniel. But Ravi, your sort of thoughts in terms of insights that we picked up from Ashok over the last 15-20 minutes or so. Quick sort of summary for our viewers out there.
I think one of the things that has been a great one for us to listen, and again for a lot of policymakers, if you're listening, or bankers, I think the point on judicial managers and moving away from debt in possession is negative. I think that's probably fairly well understood here as well, to be fair. But I think when he starts, that huge issue about fixed time frames versus extensions, which is one of the Ashok, you're back.
Yeah, Ashok's back. And Ashok, I know you were talking about something. You want to just close out that the final statement. I think we missed you, but I think your network. Yeah. Oops, sorry. I think you are muted.
Ashok, you got to put the sound. Nope.
No worries.
No worries. Yeah. Okay.
No.
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 Still no.
No.
That's a shame.
All right, we will get back. I think we'll get back shortly on this.
Let's just get back to what we were saying on the fixed time frame stuff. That's a big thing, right? I think it's still is a debate out there. But if you're interested, I think policymakers got to go out there and start looking at the pros and cons of each one. I mean, let's put it this way: if you ask me, there's a lot of unhappiness from the bankers, and rightfully so. That sometimes just restructurings drag on and on and on, and they are actually restricted from taking action, which frustrates them, right? They want to close their account and move on. So I think to be fair to the bankers, that's one of the points that is unhappy about debt in possession. But generally, I think the recovery rates are much better, and certainly trying to find ideas on shortening that time frame has to be one of the big things that we need to be thinking about as well, so that it's valuable for all the parties, and especially the business which is suffering, to stop that suffering. I think that's what Ashok rightfully meted out, that the long you take out and it drags on and it eventually ends up in liquidation. Okay, Ashok's back.
No, okay. No, I think he's done another reboot, I think.
Okay. Even if we just have him on sound,
there he is. There he is. Ashok, everything good?
Yeah. I'm back. I mean,
All right, fantastic.
This platform doesn't seem to be working very well on my stuff. Okay, so but I hope I'm back. Can you hear me?
Yes, we
perfect.
can.
Go ahead.
Okay, let me just close up what I said. I mean, emotion is something we always deal with, right, Ravi? I mean, we just have to deal with it. That's our skill. Bring the tensions together. There will always be that. As long as we can get people focused on preserving value and creating value, that's really our job.
Yep.
Yeah. Yep. And well, I don't want to. There's a question from one of our guests, Daniel, who says, "Look, morning everyone. I see the restructuring often focuses on debt mediation and refinancing. How about from a legal point of view? Is there a need to renegotiate, redraft existing contracts to reflect the new structured entity?" I think you briefly talked about this, to sit down at a table like Indonesia and so on. But your quick response to this, Ashok?
Okay, so it's very interesting. Mediation is another pet topic. So I tell you, I tried for the first time in Singapore to get a court order because we were stuck in a restructuring because the bank just didn't want to come to the table, right? And had an overinflated view of what the value of their secured debt was, okay? And it really was jamming up the whole restructuring. So I took out an application to ask for the court to order mediation, all right? So as you know, mediation is a voluntary process, okay? So it's voluntariness into the process, and it's voluntariness when you're in the process to get a settlement done, right? So my application was to say, okay, look, it's involuntary into the process, your court can order it, but in the process is fully voluntary, okay, whether you reach a settlement or not, which is commonly done in the US. In fact, in the US, to get rid of these commercial roadblocks in a restructuring, very often the judges push the parties into a mediation. The mediation is sometimes done by a brother or sister judge in the US District Court or South District Court of the US Court of the Southern District of New York. Okay, and it's very effective. So Singapore is trying very hard to do this, and I'm hearing that. Anyway, I failed in my application because the court didn't want to go any further than that because they felt that it opened the door. You can't draw a distinction between just allowing this in mediation, court order mediation in a restructuring context, and not allow it for general litigation process. So there was a discomfort. I tried to take it to the Court of Appeal. Court of Appeal also was quite clear that that's not going to happen. So I'm hearing now that the government's looking at it. I put up some papers on that, and you can read it on the Singapore Academy online if you want to have a look at it. I'm hearing there's going to be some law reform on this, and I think court-ordered mediation, okay, is a very, very good thing, because when you're stuck and people are just not talking, right, having trained mediators, and of course that's the issue. You need good mediators to facilitate, okay, right? So it can really go a long way, to get the deal across the line. So I don't know whether I answered that question, Ahmad.
No, that's yeah. I think the question is at the end of the balance sheet. I think that's critically what we actually do after the mediation or the negotiation and getting the financing. That's absolutely a new balance sheet, Daniel. And one of the things that is important, at least since even from the days of the Asian crisis, we've always talked about sustainable debt levels. Yeah. So post restructuring, the company must be viable, and that means viable in the true sense. Has growth and profit going forward. So that's definitely the end goal of that process. I hope that also helps and answer Daniel's question. But just shifting away from large, complex restructuring, and maybe this is not really your expertise, but what about the SMEs? What about them? I mean, they can't afford people like us. And how do they find relief? And nor can they hold out, this over this 18 months or 12 months or whichever way you talk, 270 days. That's a bit short. But what about them? Where does the solution lie for them?
Okay, so yeah, even though we don't practice in that space, but
yeah,
I'm involved in the law reform on that. So Singapore has got new laws in place for this. Okay,
right.
It is a truncated restructuring process and a truncated liquidation process or insolvency process to put the company down, SME. So they don't get burdened with heavy costs. All right.
Right.
So there are professionals who actually are prepared to do this kind of volume work, right? And from an economy perspective, it's just simpler, all right? If there is some value to be saved, truncated restructuring process takes it out, okay? As quickly as possible, cheap, right? But that's I think the way to go. Really, law reform specific. You can't have the one size fits all. The law that is necessary for the complicated and the practice that is necessary for the complicated restructurings. You cannot have the one law applying to the SME. It just doesn't work. Okay. So we went the path of actually introducing a new set of laws for these guys. And I think other countries in the world are the same, India is looking at it. And I think it will come out. I'm actually in the task force for the IBC review. Okay, they are reviewing it. I must say India is very progressive in terms of changing those laws. They've taken the entire process out of the domestic courts into a completely different tribunal process, and they have been achieving good results as speedy. Okay, so SMEs is a unique problem. They cannot afford this kind of restructuring. The solution, I think, is a different set of laws that can work for these kind of companies, truncated and cheap.
Can you just share with me what you mean by truncated? I mean, just to give some context to what you mean truncated versus untruncated process. The full process.
Yeah, you don't have all those complexities of that you would have, let's say, to do a full-blown scheme. There's complicated questions on class are easier dealt with. There are caps on cost. The process into the procedure into the process is very fast,
Right.
And then, it's those kind of things,
Okay, thanks. Yeah, that gives some ideas outside, because that's, I think, in Malaysia the challenge is going to be is not the large complex restructuring, but thousands and thousands of small SMEs which are struggling. And this one, and I think the tougher part of it is this question of new money. One of the things that we've seen happening is this whole idea of new money. That's, I think, I've looked back in my history of working since the Asian crisis. I've never seen a case fail if there's solid new money behind this one. But how do you, like I said, you're more than just lawyers. You guys are also into a little of the commercial space. And what about how do one goes about this idea of new money and getting that new money in?
Okay, so let's say, okay, so it's where you raise the capital. Okay. Let's say, okay, first in the domestic context, let's say it's Singapore, for example, and I'm looking for new money here, right? You first of all need to give protection to the new money. So the new money comes in either by way of financial investment. That means it's short-term lending, expensive credit, and you're quick out with protection over. So the loss must fit into this and allow it. Okay. So that kind of funding, that kind of new money is mainly for working capital needs, right?
Yeah.
Now, as part of a wider deal, part of the deal may involve, for the restructuring, part of the deal may involve an injection of new money, mainly again for working capital. So you delink it, right? So you protect the new money, and then you find the restructuring, you get the restructuring implemented, and then you roll up everything into the eventual deal, right? So the domestic context, you need the laws to give the new money protection, okay? And then the opportunities are there for the money to come in from different directions for different purposes. Okay. Now, where it gets tricky is this. Where it gets tricky is where, for example, you're raising the new money in Singapore for use in Malaysian restructuring or in Indonesian restructuring or Indian restructuring. Okay. Now, for that to happen, you need these new money still wants protection. Okay. If we can't get the commercial protection, first and foremost, they want legal protection if they can get it. Okay. Right?
Yeah.
And the legal protection can only come in harmonization of the laws. So you guys have not adopted the model law on cross-border restructuring and for cooperation, okay, and recognition. So we have. So in a sense, it's if Malaysia introduces those laws, the opportunity for you to raise capital in all the big financial centers around the world becomes a lot more open to you, whether it's Singapore, London, New York.
Yeah.
Because then you can use the new money will flow in because it gets afforded the protection. And now, so you need the laws and you need the confidence that the domestic courts will recognize and enforce those orders. You need these two things. Okay.
Yeah.
That's something that you really, I think, need to look. Those are the fundamental drivers. If you can't find that in Indonesia, the new money is choppy. So either you got to look at new money in a different context. So the new money may come in a let's say in a bond restructuring, right? Okay. You may have some principal drivers, investment funds that are behind the structuring, and you're cleaning up the balance sheet mainly by cleaning up the bonds, let's say. Okay, all right. What you do is one option is to say, okay, I tell you what I'm going to do. I'm going to put in some new capital. Okay, so you're a partial lender, right? And then the bond restructuring is done in such a way, all right, that you have some deleveraging, okay, all right, and then you give participation for people to participate in the lending, okay. Now, and then you try and get some cash management control out of a reliable jurisdiction, okay, through a Karma, for example, and then you try and work around that way. I mean, but it's much simpler if you have cross-border recognition.
Right. Wouldn't it just be, if you were going to put in money into Malaysia, for example, and if it's a straight loan or a bond, I mean, we have laws for bond. You're right, for enforcement is still there. I mean, if you come in as new money and you come in as a bond, there's no limitations on Moneylenders Act or even the rates you charge because it's a bond. You can take charge of the assets. You can go to a court and enforce it. Why would that worry that you have to have a Singapore model law to support model law recognition? The enforcement process for the creditor is still there.
Okay, that's for a new bond raising, I agree.
Yeah. It's a new bond raising in a distressed situation. That means you come in post restructuring.
So you see that I agree. If it's a new bond raising to raise
no issue.
So I don't think that's a problem. Okay.
Yeah.
But what we're talking about is dealing with the existing debt.
Rescue financing.
To do a new bond raising, particularly listed debt, right?
Yeah.
In stress situation is very susah. I tell you, really, the regulators are not going to like it, right? Their numbers are not there for the what kind of circulars? So it's got to be rolled out with a general restructuring, and that's where the
correct
is. So the new money that comes in there, the investment funds have a different mindset because fundamentally they're traders, so they get a recovery from the trading of the existing old debt, plus they get a margin on the new lending. So they in the end they look at an overall recovery of their position. So that is the mindset.
Okay.
But banks think differently. Banks.
No. I think you hit it on the nail. Is they're also buying into the old one. Yeah. So we now know there is a particular case going on in Malaysia, well known, where the international bond is trading at a deep discount. If I was an international, this one I'm seeing the legal defense put up, I'd be worried that I can enforce on that what I buy at 40 cents.
Yeah.
I see where you're going with that. Yeah. Absolutely. You know, you talked about. No. That's a well worth point making. But you did mention, about the US being miles and miles away, and in fact, until very recently, I think in the more recent cases, historically in Malaysia, Singapore, all we did was we said, okay, it's all right, I'll offer you a liquidation plus 20 cents or liquidation plus 30 cents as a restructuring offer. But in the US, I think that the way they do it is quite different. They actually look at the enterprise value and then said, post restructuring, this is the value of the business. I'm coming in, you get so much, I get. Do you see people actually looking at valuations of the enterprise to start structuring deals and saying that, okay, this is the position post restructuring, not just, okay, I'll pay you, what we call pasar malam here, 20 cents over liquidation or 30 cents over liquidation or 40 cents. Why? No reason. Yeah, I think that's what you will take. Just a bargaining process. No science behind it or no financial justification behind that.
Yeah. You see, valuation is, it's unfortunate in Asia we don't have enough sufficient good expertise to do that, and the willingness of the court to dig into value. Okay.
Yeah.
The context of a restructuring in the US, don't forget, almost every bloody judge in the Southern District of New York, in the US bankruptcy court there, comes from the restructuring world. They've actually been through the entire process and they're very commercial. Okay.
Yeah.
So these guys understand value. They really understand. Okay. They have a rough idea about how valuations are done, not just on asset but on enterprise value. Okay, which sometimes is, of course, depending on the company, is related. All right. And many of them even understand intangible assets. And the future companies, I mean, that's a whole new thing, Ravi, how you value intangible assets. Okay.
Yeah.
There are no even accounting audit standards on how you actually deal with intangible assets, Okay. So you need a bench, right, dealing with restructuring that really understands this. This is one. Okay. Then you got to empower the judges with legislation, as we have when it comes to rescue finance, okay, to actually have the right to, if they feel that it's bullshit in the valuations, to actually appoint their own valuer.
Yeah.
Okay. So valuation is everything, because one, it gets secured creditors really to come to the table, because then they don't have their over ridiculous inflated ideas of value. Okay. The what is sustainable there in terms of whether a company is putting out bullshit is also realistically dealt with, effectively dealt with. Okay. And what is available in a liquidation scenario becomes clearer. Okay. And more debatable. Then everybody gets realistic, and then a deal can be done. So value is absolutely critical, and the tools for that and the right people in the jurisdiction to deal with that is very important. But this is a hard thing for Southeast Asian countries. We are, even Singapore, I can tell you, the number of good valuers also. How many? Okay.
I think when you talked about it, and when we did just going through I think when you talk about restructuring, if you want to look at, I'm doing some research on this, and you want to look at it, you won't find a book even from the UK on it. A serious book. Right? It just talks about the various laws. But you talk about restructuring and distress M&A and this one, you could find 20 books on Amazon from the US, easily written. And when we talk about enterprise value as a going concern for the restructuring, I mean, you look at their scenarios in the US, and not we just do one scenario. They're doing low case, medium case, high case scenario. So then you restructure against the various cases, the instruments you issue, all that's been thought through. Yeah, but we've got a long way to go from our pasar malam, I suppose.
We're not very, we may have all these laws, but in the sense, in the end, the ecosystem got to move with the law. Okay.
That's right.
And the education is absolutely critical, Ravi. And that's what we need. We need people, even our policymakers. Singapore is coming around to the fact that you need proper restructuring ecosystem to keep jobs. To keep GDP going. All right. And new money is a contributor to GDP. The restructured debt is old GDP, Okay. The new money, if you can attract new money into restructuring, is a boost to the GDP of the country. So I think
absolutely.
the policymakers need to understand that you cannot look at restructuring as, this is the thing, this company is dead, forget it, everything to be done, forget it, let's not talk about it because we have pressing issues to deal with the country. It is that mindset needs to change a bit.
Yeah, and speaking of mindset, right? I mean, I think we talked about this, Ravi, quite a bit in our first episode about when we start a restructuring. I think it's very important that there is a mindset shift that happens, and it's, I assume it's the same for large companies, right? When you're trying to adopt or resolve distressed asset issues. I mean, what shift is needed, right? To actually successfully lead, or leadership is needed to successfully see through or resolve a distressed asset issue.
All I can share with you is what we are doing here. Okay, it is still a works in progress. It still works in progress. Okay, number one, a well informed and competent bench that understands the ecosystem and understands how to navigate it. So we have cluster judges in Singapore, right? Where all this complex restructuring, they go to the same judges, right? They know the practitioners, they know the environment, they came from practice, and most of them understand this thing. Okay, number one, strong bench. Of course, before that, you need strong laws. Okay, right? Then the education, and this is where, I know you guys have IPAM, right? So I'm a director on IPAS, which is the Singapore equivalent, right? We are looking at rolling out, we already rolled out undergraduate courses in the local universities for restructuring, and that's a course. You see, IPAS is like IPAM is partial lawyers, partial accountants, right? The board is like that. So the undergraduate course is run by IPAS, by both accountants and lawyers, right? For undergraduate students. Then we are rolling out probably by the end of the year a postgraduate course. Again, this time partnering with SMU, okay, to allow training, and they have to sit for exams and all these things, which we hope will then become the base for accreditation for the regulators to set some standards, okay, for them to set standards and for us to give them some marker of standard, all right, on what will qualify as an IP. Now, in Singapore, we're opening up the whole market in terms of who can play in the IP space, right? The insolvency practitioner space. So last time, we had approved liquidators and approved auditors for JX and liquidations. Okay. Yeah. So now we have a new creature. Now we have a new creature called the insolvency practitioner. So eventually, where we will get to is that the market is completely opened up. You may have a valuer who can be an IP. You can be an ex-banker that can be an IP. You can be a lawyer that can be an IP. As long as you have the proper training, you pass the courses, you pass the exams, you meet the standards, and the government gives you a license. So I think all these components got to come together. It's not just one. So the education of the accounting profession and the legal profession, when this area of practice is so hybrid, right? Okay, that needs to happen, And IPAM needs to take a bigger role in terms of doing that thought leadership.
When you talk about the fuse profession, would you accept lawyer buroks like myself?
Hey, I'm an accountant burok.
There you go. New career for Ravi. It's been amazing. It's like 15 minutes just went by so fast, right? When we were talking, I just want to, as we close it out, just get comments from you first, and then maybe Ravi, your summary sort of insights. But Ashok, if you could leave us with some gems of advice or some nuggets of wisdom in terms of, just for our viewers out there, if you were to give them some advice and something to take away, especially for those who are considering or maybe in the process of going through a restructuring, what sort of advice would you impart to us?
Okay, so just like I do in all my India seminars in other countries, I'll say Singapore is a tiny dot. Not me to give anyone advice. Okay, all I can tell you that in the end, every country has got to do what is relevant for itself. National interest, self-interest in that process is critical. But all I will say is this: if the country and the jurisdiction is serious about saving jobs, serious about rehabilitating companies, everything I said about the ecosystem changing must happen first. The laws,
Okay.
the thought leadership, the training, and the strong bench.
Okay. And people can reach you at BlackOak /LLC.com. I think that's your website, right?
Yes.
So and Ravi, your final thoughts and insights and key takeaways.
I think I stand by what I said in the beginning of the program, which is these guys are more than just lawyers. And that's true. But I think every time we have somebody here from Singapore, I'm always amazed. I mean, like it or not, maybe our market's a little bit, we tend to be, because it's unique, and we tend to be a little bit inward focused. And it's interesting because like you said, Singapore is small, so you're forced to look outside. And it's obviously a trading center and a banking center as well, which makes it very different in your outlook. But that's just, again, as always, you brought that wonderful stuff that we don't see here much. It resonates in a lot of ways, because it also, we should be doing this, we should be doing that kind of thing is coming up every time you speak, and it says that, and we say, we need to be doing more of this, more of that. I think that's the takeaway. It's always, when we have a guest from Singapore, it gives a much better regional perspective than just talking stuff at home. Yeah.
Thank you so much.
Fantastic.
Ravi.
Thank you. And to everybody, yes. And to everybody, it's a Friday, so get ready for the weekend, and wishing you all stay safe, especially for those in Malaysia. I think with record-breaking numbers every day, literally.
I'm waiting to come to Malaysia to have.
Yeah, I know. Good luck in the wait.
Well, the only good news, if you've seen the numbers in the Klang Valley, is beginning to drop. That's the vaccination is making a difference. Yeah, that's beginning to drop. So Klang Valley, we can see a different.
Yeah. So with that, thank you so much, everyone. For those who haven't checked out Necole, go to necole.app and you'll be able to check it out. We're going to close with a final piece on Necole, and we will see you guys next week, same time, same place, 10 a.m. every Friday, Rethinking Balance Sheets. Goodbye, everyone.